Probably saw a whole lot of comments and negativity stuff going around about Buffett's comments about Bitcoin. So one thing I noticed about the people that I know are like super heavy into cryptos is you can't say anything negative about cryptos. You say anything negative toward cryptos, you're like some idiot Luddite. I'm not even sure that's how you say the word. That just doesn't get the world and where it's going, and the cryptos are the future. And no one's saying it's not, but when you start believing everything and you don't want to look at any negatives, also a concern. So, of course, conversation this morning about some of the stuff Buffett said with people, and you got the crypto bros, it's crypto, crypto, crypto. And does anyone stop to listen to what Warren Buffett's actually saying? They don't. They just see someone that's anti crypto and they want to go after him. And it's like, how many times in my life, especially where I came from, where people had no money, once I got money, you always had those people that had no money trying to tell you how to make money. And it's, wait a minute, I'm the one that made the money. I'm the one that's got the money. What are you talking about? In the same way, if you look at how wealthy Buffett is and how long he's held on to the wealth, that is the key. And I talk about wealth preservation. Done a few episodes on it. I'm going to do more episodes on it because I've seen so many people that had this quick rise and fall in life. They make a bunch of money. They think they're the masters of the universe, and they start making these investments, and then they're busted out. They're broke at 45, and they're screwed for life. Do you have any idea how long or how hard it is, rather, to keep that level of wealth and keep growing it year over year over year for decades? That's what Warren Buffett does. And I think everyone misses out on it. And in this speech, he was saying, look, if you give me a chance to buy 1% of all the farmland I'm going to buy, it's going to produce something. If I get a chance to buy 1% of all the real estate market or rental market, I'm going to do it because that's going to produce something. People got to eat. People got to live. We technically don't need Bitcoin. And I think we've learned that not just about cryptos. If you look at a lot of these things that I've been saying, like we don't need to order our cars from a vending machine. We don't need our food shipped to us in a box from some company that's probably going to charge us a bunch of money to ship us the food in the box. We don't need our clothes picked out for us and shipped in a box. We don't need Netflix is getting hammered because you realize when there's nothing good to watch on it, you don't need. Do you realize how many things we don't need? We don't need Facebook. We don't need Twitter. We don't need cryptos. What does cryptos really do that our other monetary systems don't do? Now, I know it serves other purposes, but when you're trying to hang on and manage the kind of wealth that Warren Buffett does, real estate and farmland is more attractive than cryptos are. So if you look at how much Bitcoin fell from its peak, for example, how many times has Berkshire Hathaway done that and lost that much money? So focus on wealth preservation and you'll see why he talks the way he talks. A lot of times people will, what's a good example? Like when you're on a certain level and someone's not on that level, the things that they would think about when they're in your shoes is not the things that you think about, because once you get in those shoes, you think differently. They got a different mindset. I was talking, Kane and I do on another show. Kane mentioned doesn't Warren also have to worry about the things he buys because he could, people might judge him based on what he buys, for example. And if he's buying something that is maybe not that great, that could affect his whole portfolio. Does anyone know what it's like to sit in the seat of this guy and manage that kind of money and be this successful over a long time? Look, every hotshot trader comes and goes. You have a couple good year run, and then you fade off. Who else can consistently do this decade after decade after decade after decade? And not really lose, man. Not really lose. And that's the thing. We always talk about how to get rich and how to make the money. We never talk about how to keep the money. Warren has figured out how to keep the goddamn money. Imagine if you put like $50 billion into Bitcoin at whatever that was 60,000, and then it drops down to 40. Yeah, you don't really see that happen with him, do you? And I get it. Bitcoin might go to the moon. It's going to be this decentralized, blah, 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 blah. Everything that crypto person says. When's the last time you seen Warren Buffett's net worth drop by that much money, for example? Maybe it did in 2008. I don't know, which was outside of his control. So you start looking at wealth preservation. How do you get that level of money and then manage it, keep it, hang on to it, and continue to grow it at a good clip? Man, we're so worried about getting rich quick and getting rich easy that we just want to throw some money into some exchange and a crypto, and it's gonna like double overnight because someone posted something on Reddit, and we want this easy money. And sure, people have made money in Bitcoin, they've made money in NFTs. How many people 20 years from now will be able to hang on to that wealth? We'll see. That is Warren Buffett's point of view. If I buy 1% of all the rental market, I'm going to still have that wealth in 20 years. If I buy 1% of all the farmland, I'm going to have that wealth in 20 years. Look, you don't want to be 60 years old and busted out, and you're out there begging to get a Walmart greeter job because you got no cash. I've seen presidents of companies that were running stuff in their early 40s, mid 40s, and then it's probably 10, 12 years later, I saw them working at Home Depot behind a paint counter. Don't be that person. Wealth preservation, there is no get rich quick. There is no easy. There's a fundamental way to hang on to your money. And I suggest, which I'm not giving financial advice, but I will suggest, maybe read some books about how to hang on to your cash. I'm very big on once you get the money in the account, you don't give it up. You don't lose it. You don't find ways to lose it. You don't gamble. You don't take massive risks unless you can afford the risk. What Warren is saying is not stupid. What he's saying is, I like hanging on to my billions. And how many times have you heard one of these traders who opened a Robinhood account talked about how much money they made on GameStop, bro? And as we're seeing, as the market crashes and the meme stocks crash and some of these other coins crash, that all of a sudden you don't hear from those people no more. You don't get the text anymore. You don't get the DMs anymore. You're not getting anything anymore. They're quiet, right? And what it comes down to is people say, well, he missed out on Bitcoin. He missed out on Tesla. He's not that savvy of an investor. He missed out on all these things. The problem is it's easy to say that after something goes up. What you don't understand is, I see this also, people talk about Shark Tank, right? Shark Tank turned down this investment and then it blew up. Well, look, for the one that they missed out on, there was 10 other companies they would have invested in that would have lost them 5 times more than what they would have gained from the one. And I think that's what people don't get. Even when I'm investing in startup companies or other companies, for example, sometimes this might be a winner, but I got to walk away from it because it's really easy to pick losers. It's really easy to pick something that looks like a winner that ends up being a loser. So yeah, Warren might have missed out on Tesla, but did he also miss out on 10 losers? And those 10 losers would have costed him the capital that he wouldn't have had to invest in something else. If you don't invest a lot of money, if you don't invest in companies, if you're just not onto that level, you don't get it. You don't understand how easy and how fast it is to lose your money. This is why they had the old, friends, family, and with the fools regulations around angel investments. They're trying to keep people in the accredited investor, sophisticated investor type of realm from investing in the high risk things. Because it's not that hard to you can't do the spray and pray model where I'm gonna loan money to 10 companies and if one of them works out, I'm gonna recoup. It's like, what? You're gonna 10x on one company and then recoup? Then you're gonna break even. That doesn't sound like fun. What do you think you're gonna do? You're gonna invest in the next Salesforce and this thing's gonna IPO to the moon? How many things have actually done that, by the way? You got to step back and say, yeah, he might have missed out. No one's that smart where they can just pick all the crazy winners. Isn't that what they try to paint Cathie Wood as? How's her fund doing, by the way? I don't get it. I feel like the people that keep saying, well, Warren missed out on this stuff. Well, you were kind of trying to paint Cathie Wood as that guru that was picking all this, betting on the future type of stuff, and then it didn't work out last year. I want to say her fund took a beating. So, what the lesson here is, yeah, you might have missed out on Tesla, And you might have missed out on making $10 billion, but the 10 losers over here would have lost you 30. Warren had a way to make sure he had steady returns, didn't rack up a bunch of losses, and he keeps staying at the top of the list of billionaires. The crypto people get mad when they hear him talk about this stuff, but it doesn't mean cryptos are going to crash. It doesn't mean that cryptos won't be amazing, that they're not going to go somewhere or do great things. But when you got a bunch of people that don't manage the level of money he manages, they don't really understand what it's like to try to preserve that type of wealth. They're too busy trying to get rich. He's already rich. He's trying to keep it. And that's like two different things. Like, how many people do you know that got a hold of some money and blew it all? They lost it all on real estate. They lost it in the stock market. They lost it on starting businesses. Look at Warren's track record. Yeah, he probably leaves returns on the table. He's risk adverse. Why is he going to buy BOA? They're a little more conservative on things. They're not, hopefully not going to end up Lehman Brothers. It's just one of those things that it's a completely different bucket to be in when you're trying to get rich and you're taking risk and you're gambling, and when you're already rich and you're trying to keep your money. I'm in that school of thought, right? I worked hard, created company after company after company, and then invested in a company, invested in more companies, started more companies, invested. You get in this, I'm trying to accumulate. I'm trying to build net worth. You're trying to build, and then once you get it, you want to get it into the bank and keep it there, right? You don't want to lose it when a crypto crashes by 50%. I don't want to take a risk on the Netflix stock. Now, Bill Ackman, what did he lose? $400 million on his fund on Netflix? Who didn't see that coming? Peak COVID meant people were stuck at home. We're working out, so everyone bought a Peloton. We were at home. Everyone bought streaming. And now that we've been released, Gen Pop is back in the wild again. We're not sitting home and watching Netflix and riding Pelotons. We're back in the gym and we're doing things. So it's like, why are we surprised when things aren't going to reach that peak when we were stuck at home with a bunch of money the government gave us? Well, Bill learned a lesson. A $400 million lesson. So again, wealth preservation. I'm going to do more episodes on that. I play with cryptos. I like cryptos. I may not share the same opinion that Warren Buffett does, but if I had Warren Buffett money, I'm probably not messing with cryptos. I'm trying to figure out how to get a nice steady return to make sure that I keep my wealth. Because we know that people need places to live, they eat, they're going to need health care, they're going to need traditional banking, because that's the way the government's got the world set up. There's things that people need. We don't need Twitter. We don't need Snapchat. We don't need Facebook. We don't need Netflix. These are things that are nice to have. It's a luxury to have someone pick out your clothes, put them in a box, and ship them to you. It's a luxury for someone to pick out what meals you're going to eat this week and send you all the ingredients. But when push comes to shove and money gets tight or gas prices go up to $5, all of a sudden, I don't need those meals prepared for me in a box. I don't need my clothes in the box. I don't need a 50 million streaming service. You got Hulu, you got Netflix, you got, Amazon Prime Video, and then you got to have all these other plus channels, and then you got $100 in streaming services. When economy starts to slow down, you don't need that stuff anymore. We do need just food in general. You need to go to the grocery store and buy food. You're going to need an apartment. You're probably going to need a car. You're probably going to need gas for that car. You're going to need banking services. Warren Buffett he might have missed out on Tesla or Bitcoin, but seems to be doing okay to me. And it's just a different mindset when you're trying to keep the money. So keep that in mind. I'll catch you on the next one.